Good afternoon, everyone. So we have about 2 minutes left in the final trading day of 2022. So it's officially the final countdown. And in this video, we're gonna look at where we ended up this year. So let me go ahead and start a screen share. But yeah, like I say, this is our final um, market close of the year 2022. So cue the sound effects. And you get the idea. So we're actually down today, unfortunately. The last day of trading is kind of like a microcosm of the whole year 2022, which this has been our worst year for the market since 2008. So hopefully that means there's only one direction we can go in 2023, which is up. So let's just review here, and the market's going to officially be closed here any second. Oh, it just closed. If we're lucky, my bell might actually go off. No, it didn't. Usually when I'm on Yahoo Finance, when the market closes, like if I have a tab open, the bell actually goes off. So it looks like we ended the year down 73 points in the Dow, which, a lot of people wonder why we still even talk about the Dow. The Dow is not representative of the overall market. The odd thing is we had a little bit of a surge in the Dow in the last 3 months of the year. So from September 30th onward, we were at 28,725. Let me just show you here because I'm looking at my iPhone. Um, yeah, so if you look at September 26th, we were at 28,725. So we went 29, 30, 31. We gained 4,500 points towards the end of the year, and we peaked out. We were back over 3,400 as of November 28th, but then things started crashing back uh, as we've gone through the month of December. And here we are today with the last trading day of the year. So the Dow, for those of you that may not know, it's 30 blue chip companies basically. And I'm not going to go into those 30 in this video. You can look them up, but it's 30 blue chip companies. It's not representative of the overall market as the S&P, well, really as the S&P 500 is. So now let's look where we finished at the S&P. We were down a quarter of a percent for the day, 9.76 points for the year. So yeah, the S&P was actually flirting with 5,000 points, which the index has never hit before. We were flirting with that at the beginning of the year, but obviously it was a bloodbath for the most part. For the year as a whole, it looks like we were down almost 20% in the S&P from the first day of trading, which I believe was January 3rd. And then the Nasdaq is where the real bloodbath happened. The most red, so to speak. We were, let's see, it only dropped almost 12 points today, but for the year 2022, we were down, to be exact, we were down like almost 32%, 31.5% to be exact, year over year, which is just crazy. That's, like I said, worst year for the markets overall since 2008. So some people still believe we have room to grow, or further room to shed further weight in the market. I hope not. I do believe in 2023 the Fed is going to start cutting rates again, which is going to mean that stocks will start going up again. So really, I would say after you've maxed out all of your tax advantaged accounts, like your 401k, your Roth IRA, and whatnot, I would say, we never try to time the market, but I would say between your tax advantaged accounts and your accounts that are not tax advantaged, if there's anything left over, you may want to sit on some cash for the first couple months of the year and just see, because the Fed could actually start cutting rates again within the next 3 to 6 months. So we'll know more after the next Fed meeting. But if we look at the Russell 2000, the Russell 2000 was also down. Like I said, all the major indexes were down. This one was down about 21.7%. So those are the three major indexes. New York Stock Exchange shows up on the iPhone. Actually, four. We covered four. So what I would say, there's a fund that I really like that I've participated in for several years now. It's called the UPRO fund, which is actually indexed to triple what the performance of the S&P does on the upside and the downside. So now could potentially be, because this fund is down 58%, which is, like I said, what did we say a minute ago? The S&P was down 19 to 20%. This is exactly 3 times what the performance of the S&P has done this year. So it uses derivative investments and whatnot. So it's actually indexed to triple the performance of the S&P. It's got a really high expense ratio at almost 1%, really high for an ETF. But when the market does well, this expense ratio can be justified, because I'll tell you, like, since I've been in this fund, like, there were years that I was rolling in this fund, particularly from 2020, once the pandemic started, to December of last year. I mean, I was rolling in this fund, as you can see, because it's split a few times. I got into this probably back in 2014 or 15, but looking back in hindsight, of course, we're perfect in hindsight, and like I say, hindsight is 2020, and this happens to be the year we're looking at. If I had got in at $13.81 and then timed it perfectly, it peaked at almost $80 a share. So that would have been, just to look at the phone here, because unfortunately Yahoo doesn't tell us that. If we look at from, okay, 2020, when it basically dropped straight down all the way to the peak, it was 632%. 632% from March 16th, 2020 to December 20th, 2021. And since then, we've fallen like almost 60%. We fall, to be exact, I believe it says 58% here, but actually from December 31st of last year, it was like 57%. So I think this one could be primed for a really good year once the Fed starts cutting rates. Some of the other index funds I look at, the FISROX, Fidelity Zero, Total Market. That's a total market fund. This one, $13.38 a share. This is a mutual fund, but it's a no cost mutual fund, which I like. And then the other one I think I got in, like I was telling in my last video, my HSA, I got into this Fidelity Zero Large Cap Index, FNILX. And typically, anybody that works in the industry, you don't need pre-clearance when you do mutual funds or ETFs, because they're considered index funds. You do for other investments, however, whether it's option stocks or whatnot. But yeah, these might be some good plays for the new year if you're looking to index it and you're looking to just ride the next bull wave upward. But with all that being said, that's where we ended up for the year 2022. What a year it's been. So the Dow ended 33,147.25 is your final balance for the year 2022. NASDAQ, final balance 10,466.48. Russell 2000, 1,762.82. And then S&P 500, 3,839.50. That's the final balances of the major indexes for the year 2022. And I have a diaper commercial on the top, it looks like. So the only correlation I can make is that that's what's in the diaper is what the market has made us do throughout the year. Oh, and they released Trump's tax returns today, so that should make everything all better, right? I'm surprised the market didn't soar today. Odd, right? But anyway, so yeah, that's where we ended up for the year 2022. I just wanted to make a quick video on that. That probably won't get a ton of views because I didn't talk about dividends, but I like to, years down the road, kind of track and, oh, look, this was where we were. Oh, and let me give you as a last point my predictions for the market for the year 2022. So we can go a year from now, or I'm sorry, for my predictions for the year 2023. What are they? And we can come back to this video and look a year from now and see how right or wrong I was. I'm thinking that we could see actually a 15 to 20% gain in all the market indexes this year. I would say that prediction is partly hope, partly prediction. It's about 50-50 because we're still probably going to drop in the first quarter of the year, but if we can do like 15 to 20% gain between the S&P, well, the Nasdaq will probably outpace because the Nasdaq's fallen further. So we could see the S&P doing anywhere from like 10 to 15% in 2023, Nasdaq doing maybe 15 to 20%. And who knows, the Dow could do 15% also. Russell 2000, who knows? That's always the wild card. That could do, if small caps finally have a good year, that could also do 15%. But that's what I would say without, oh, here it is right here. Yahoo just posted S&P 500 falls 19.4% in 2022, capping worst year since 2008 financial crisis, like I just said. I rounded up a bit. I said 20% because that's about what it says since like the last trading day of last year. But that's where we are. Those are my predictions. Hope you enjoyed that. If you did, please remember to like, comment, and subscribe. Even if you didn't, also consider like, commenting, and subscribing because I try to put out very knowledge heavy content. And I'm going to have other channels coming in the new year. So stay tuned for that. More to come on that. May try to get one more video out before the end of the year. We've got like 30 hours left in the year. So the clock is ticking. Anyway, hope everyone has a good rest of the year. I am going to try to get another video out, like I said. So stay tuned for that. Like, comment, and subscribe. Thanks for watching. Take care.